If you look on the right-hand side, the white background chart, or it should be white background, the left-hand side is a 5-minute chart over here, and this is a 30-second chart. So I have stripped this thing down here to opening range gaps and Asian session liquidity pools. Now, right away, you should already notice that Friday settlement price is up here. Okay, so that's going to be higher than where we are at market price. Because we have settled here, and I'll go into regular trading hours, and I'll explain why I have the chart annotated like that. So because it's Friday's settlement price on regular trading hours, and since I can do this here, I'll just show it to you in a 1-minute chart. This is how you pick your opening range gap, previous day's settlement. You go to regular trading hours, 1-minute chart. Last candlestick here is at 4:14 because there is no trading at 4:15. It settles at 4:14, so there's no data for 4:15 because the market's closed. Well, we're annotating that here on Friday's 4:14 p.m. Eastern Standard Time. That is our previous settlement. In this case, it's previous week settlement price on regular trading hours. So naturally, anything opening lower than this price here on the left-hand side, which is regular trading hour settlement price at 4:14 p.m. Eastern Standard Time, it's a mouthful, I know, but it's just simply regular trading hours close on Friday. Okay, so we have not yet seen any regular trading hour trading for the new week yet. It's all electronic trading. So when it started trading at 6 o'clock yesterday evening, settlement price on electronic trading hours here. So you would annotate that. Okay, new week opening gap low. Why do I know that's the low? It's because we settled here and we started trading here on Sunday at 6 p.m. Eastern Time. New week opening gap, consequent encroachment. All right, and now you can go back into looking at where we are in relationship to all those things. You can see the new week opening gap is up here. It's also encapsulating the Friday regular trading hours settlement price, which would be the Monday gap reference points. So it's always previous day's settlement at regular trading hours, but you don't call it or label it as yesterday's or last Friday's date. You're using this data for today's trading, which is Monday. So it's going to be Monday's opening range gap high because we're sitting here right now. All right, so let's go back into a 5-minute chart on that one. Okay, and over here, 30-second chart, you can already see there's a lot of liquidity sitting under this block of price action. It's just looks kind of wonky. I like the idea of coming back down to Thursday's opening range gap low. And if it was to do that, if it were to do that and trade down below it, we have Thursday's Asian session sell side liquidity. Now I'm going to magnify this chart here and kind of show you what that reference is. We have some minor sell side, which we've already attacked that. The bodies have stayed above that. We wicked down through it, so it's allowed to do the damage there. We have this level here. I'm watching without having an annotation. Should we start to slide again lower? That consequent encroachment, and then we have the Asian session low. You can see that 8:30 p.m. It's New York local time always on October 17th, last Thursday. So the liquidity we're sitting below that time of day, okay, which is a session high or session low in this case. When you don't have any data, okay, nothing coming out at 8:30, and the day is pretty much void of any kind of volatility injections, no real impact drivers by medium impact or high impact from the economic calendar. You want to aim for session highs and session lows. That means what was the high and the low of London? What was the high and low of Asia? What was the PM session high and low of the previous trading session or trading day rather? And then what was the AM session high and low of that previous day's trading? By going into your chart and annotating where the highs and lows are respectively, in other words, what was London's high and low or the overnight dealing range? And if we're in a market protraction where it's just really running in one direction, you don't grade that. But if there is a consolidation, if you grade it, you can anticipate exactly where throughout the morning session during pre-market, where the next subsequent premium or discount array will form. And you can trade the pre-market session without even having to be there for the opening bell or do anything the rest of the day. But when we have no data, when the economic calendar is anemic, it's just simply void of anything that would constitute an injection of volatility by a medium impact or a high impact news driver, some kind of news data, then the easiest thing you can do is aim for, and you don't need to do it just in these instances. If it becomes something you like, you can simply use previous session highs and lows. That means not the daily highs and lows. That's also included here, but session highs and lows. Okay, so we strip it down to London session, New York session AM, PM session in New York, then you have Asian session. Okay, so you have 4 opportunities per day to frame a trade setup. So my go-to protocol is when there's no data, when there's nothing coming out at 8:30, it doesn't mean that the market just sits still because there's no data. Obviously, it's going to move. But what you're going to aim for is session highs and session lows. And again, do not think that this is the only thing you do just because there's no data that's being released at 8:30. But it's my usual reach for, okay, well, I'm just going to simply look for the liquidity in the previous session. So what was the high and a low in London? We're already annotating the Thursday's Asian range low, which would be below that would be sell side. And then I have, I believe, Wednesday as well. Yeah. I have Wednesday's Asian session sell side liquidity pool annotated right here with these relative equal lows. If you look at that low right there, it's 810. And we don't care about anything over here because that's the low during Asia. And it's a relative equal low. So if we were to lose ground this morning into the regular trading session, 9:30 going into 11 o'clock London close, if we were to trade lower than this low here, my focus would be here for the morning session. That means between 9:30 and 11 o'clock or so going into noon. As it stands right now, I want to kind of show you London's overnight dealing range so that way you can frame it and you'll know what to do each session. And you can do this every single day and you'll never run out of setups. You'll never, ever, ever, ever run out of setups. Even on high resistance liquidity run days, these reference points will be used. On low resistance liquidity run days, they are absolute bangers for just easy, low hanging fruit objectives, getting in, taking your profit right there and being content with that. And once you get it for the day, then stop, then take the rest of the day because you're going to be training yourself for discipline. And you're also looking for that one good setup that you trust based on the technicals, based on your bias, based on everything you have going on. And if you're trying to just press the button every time you feel an impulse to do so, you're not really following a model. So the only way you fix that is by going in and looking for one good setup that has a plethora of things that are around it support the idea that is likely to go there in that direction at that PD array you're trying to trade off of. And being diligent about forming that responsibility, that accountability in yourself, only looking for that one setup. And the way you get there is simply knowing where are the likely candidates for the market to draw to. Now, taking buy-side liquidity and sell-side liquidity out of the equation in terms of just nearby swing highs and lows, and then framing on which swing highs and swing lows. Which are they? Well, in London, we have to frame, obviously, the London time. So here is midnight. And we're working again with the 5-minute chart. So midnight, New York local time. So that's true day. And then we have the kill zone, which is 2 a.m. Eastern Standard Time, which ends at 5 a.m. Now, where's the liquidity in that time? Well, that's the low of it here. So it can rebook back to that low. But I'm not interested in it. I want to know what is the, I'm going to make these levels black, okay? So this is London session low, okay? And then you can already see what's here. What is that? Smooth highs. So we have relative equal highs. What you're doing is you're labeling your chart with these reference points for the basis of understanding where certain liquidity pools will be a factor. Now, obviously, it goes without saying that, there's a short-term little high here. So what would be resting above that? Buy side liquidity. But in reference to and in deference to time, what's more salient for the morning session? Is it the London session highs here, or this one single little candlestick high, where there would be buy side above both this area here and these? But which one's more likely to be a draw on liquidity? Would it be simply interest only go back up to this high here and not even disrupt these smooth highs? Or would it be, yes, this would be one minor objective to reach for, but we would like to see it want to accelerate through that area to get to this area here before they can take their stops out of the marketplace? We want to see the market gravitate back here aggressively. That further is the likelihood in pre-market, because why? We have a gap. Now it's slowly eroding the size of the gap that would be if it was opening down here. That would be a rather large gap. But it's narrowing that gap now as we get closer and closer to 9:30, which would be where I'm at here on the 5-minute chart. So we have time. In pre-market, when there's no data, I like to look at where we were for London. So if we were looking at trading in London, these are the reference points that that session created, its range. The highest high inside of London between 2 o'clock in the morning here and 5 a.m. when the London session closes, or in terms of the kill zone, the time that the algorithm will be looking for liquidity, looking for PD arrays, looking for a reason to move. All of that is encapsulated inside that time. So again, back to where we're at. What is the usual protocol for a discount gap opening at 9:30? Meaning, if we open lower than previous day settlement, what's previous day on Monday? It's last Friday, always. So unless Friday was a holiday and there was no trading, we would simply use previous day or previous week if it's a Monday. So in this case, since it's actually Monday, we refer back to Friday's regular trading hours close or settlement price. Anyway, so when we have a gap lower, now because it's opened lower, what is the bias? What's the bias for the next 30 minutes or the first 30 minutes at 9:30, 10 o'clock? It would be bullish, expecting a minimum of half of that gap's range to be traded to, because there's a 70% likelihood of half the gap being traded to during the first 30 minutes of trading, 9:30, 10 o'clock Eastern time. So if it were to do that, okay, and again, this is hypothetical because I'm not going to be here for 9:30, okay, but I'm just giving you how I look at the pre-market session, and then how I would use that also in relationship to session highs and session lows, as we have here. We have London sessions highs. That's my interest. I'm not interested in just simply going back to the London lows. That we've already worked those here. So if we can get back through the London low, what levels would be impactful? Well, obviously we have a short-term minor buy-side liquidity there. Okay, so it's ghosted there. You can still see it, but it's not jumping off the chart saying, hey, look at me. So your eye isn't looking at that and thinking, well, this is all there is to this move. These levels are bold because I want to see that as a much more impactful level to draw to, not to simply, let me come up here and knock out the stops on anyone that's short here. This is where the majority of the liquidity is. If anyone's short up here, this is where their stops trail to. But using that 408 level, hypothetically, say that was 20,408.00, say that was at 9:30, and that gap would be solidified as a discount gap, meaning that we opened lower than previous regular trading hours settlement price, which is this level up here I've annotated already for Monday's opening range gap high. That means for the next 30 minutes from 9:30 to 10 o'clock, my bias would be bullish at the very minimum until 50% of that opening range gap is traded to. So hypothetically, okay, and this is not to be used for today, okay? I'm just saying, I'm teaching you how to do this stuff every single day going forward. Okay, so hypothetically, let's say that is the other side of the range, or what would be quote unquote the 9:30 opening price. That means that this would be your first tick price at 9:30, and then you reference where you previously settled on Friday because it's Monday. So you would drop your fib on that level here and up to 494 and a quarter, and you drop it. So there's 50% of the opening range if it was using 40, it ain't using 408 because it's not even 9:30 yet. So be aware that what I'm suggesting to you here is just a hypothetical approach to how I do it anyway. So notice that we have half the gap here. And if it was sitting here like this, would I be content with simply trying to be long up into that level there, knowing that there is London session highs right here that are smooth? So what would be the most likely scenario for ICT to be trading in that situation? I would be long, looking for a partial here, but more specifically aiming for a draw in above here. Because if it's going to go here and it's in close proximity to those relative equal highs, it's not likely to leave that there because we have a whole lot more or half the other portion of that gap still to be traded to. It could go a full gap closure or 3/4 gap closure. So by blending session highs and session lows and also incorporating the opening range gap when the gap is allowing that measure of uh, importance, in this case, hypothetically using that 408.00 level, if it were the opening price, it could be simply any price. I mean, I'm saying if it, say we open up here, okay, and that would mean that we have mid gap would be essentially about there, which also agrees with clearing out the London session highs buy side. So it's building what? Several things, not just one thing, several things to lean on in terms of a draw on liquidity. And you're using finite reference points, not something that's always morphing into something new, always trying to figure out a mystery in price action. The highest high and the lowest low of London session is what it is. That's what it is, okay? It's not going to change. It can't hide it from you, okay? And the opening range gap, if there is one, and generally there is one, that just depends how much of a gap there would be. If we're opening lower, you know, until half that gap is filled during the first 30 minutes, I am looking for longs. I'm not looking to go short. I'm never, ever, 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 ever going in there on the basis of simply just going, I'm going to go short because we opened lower. That's the worst thing in the world to do. That's what retail-minded traders do. They want to chase. They think, wow, we're way down from yesterday because they look at the relationship between yesterday's close to where we open today. That's the public's perspective. The professional perspective is where do we close from today's opening? That's the challenge I put out for the people that make indicators. If you plot a cumulative line on the relationship between yesterday's close and today's open, and you plot that on a cumulative basis, you're going to see what retail perspective is. And if you plot it on the basis of today's opening price versus today's closing price, you're going to get the professional mindset because that's actual accumulation and distribution once the market has booked. When there's an opening price is always rough cut sentiment. That means it's meant to go out there and inspire or discourage traders that are less informed because they're mostly impulsive creatures. So they see, oh, we opened lower than yesterday's close or last week's close. So therefore they think it's weak. So therefore they want to chase it and they go short. And then what happens is the gap starts to close in, even if it's just a half a gap, that's enough to wipe them out. Many times because you retail traders want to over leverage, just a quarter of the gap being traded to and being filled, just a quarter portion of it would stop you out and cause you to have a losing trade or a losing day. So it's real important to measure several factors relative to time, because that's what we're focusing on here, time, and then what price levels in those periods are we concerned with. If we're looking at days that have high impact or medium impact news drivers, then obviously what I'm showing here still is applicable. It's even more likely to deliver faster runs. What's missing is the volatility injection because of the news not being available to us. We don't have a medium impact. We don't have a high impact news driver. We don't have like a PMI, a CPI. We don't have any kind of, we have really nothing to speak of Monday and Tuesday of this calendar week. So I'm not suggesting that simply because there's no data that there's no reason to trade. There is absolutely reasons to trade. But you have to have a procedure or a protocol that you're going to stick to help you frame your setups. Otherwise, you're guessing. Otherwise, you're trying to do something on the basis of just one candlestick pattern, one order block, one fair value gap. Just because it looks like it's, this high here or this low here, which one's it going to hit? Is it going to take the minor buy side here? Is it going to take the minor sell side here? Because that's what should be framed. Basically, right now where we're trading right now, your focus should be, are we going to take the buy side here? Or are we going to take the sell side there? That's the next move. Nothing else except for staying inside that range between this high and that low. There's nothing else you can do. There's nothing else to do. Either it stays in the range, or it runs for the buy side, or it runs for the sell side. So your question that needs to be answered is, do you know with any degree of confidence which one of those levels is going to be traded to? Now, as we get closer, if it stays in that range between this high and that low, as we get closer to 9:30 opening bell, you want to see it draw higher, because why would that be a factor? Because the gap aspect, because you're already lower than previous day settlement Friday. So again, at 9:30, that starts that countdown for the next 30 minutes between 9:30 to 10 o'clock Eastern time. Your bias is what? Bullish, until 50% of that gap is closed. It doesn't mean it then becomes bearish. It just means that 70% of the time, that's what's usually unfolding. Now, does it mean that if it doesn't go up there and go to 50% of the opening range gap within the 30 minutes of 9:30 to 10 o'clock, then it ain't going to go there? No. I'm still going to look for that. I'm just saying, for a immediate bias, something to look for in price action, something to study, something to tape read, something to draw your focus to, instead of just looking at the charts and not knowing what you're looking at or what you're looking for. It gives you immediate information, intel. If we gap lower, okay, look for it to go higher, up to half the gap. And that could be your entire model. So my interest right now, as we go into 9:30, okay, or shortly after 9:30, because we have the strong likelihood it's going to be a discount gap, that means we're opening lower than Friday's regular trading session hours. My interest is the London session highs. Okay, that's what I'd like to see. So I'm saying to you that I think, based on what we have right now, if we start to sell off initially, say we take out this low, then I would look for it to change directions and come back and target the London session high, and that would be what I'm aiming for the morning session if I were there at 9:30 and it started to sell off first.